So looking at the bigger market now for Nigeria, we see it's still positive at intraday at 0.01%. So yesterday, a bit of confusion. Towards the end of the market or trading yesterday, we saw we were on 109, and then, just at the dying minute, there was a drop. But the good thing is that intraday today, we finally have that 109,000 level for the NGX, 109,007.31. In South Africa, they've also recovered, even though they haven't gone back to the 92,000 level. They're at 91,523.38 intraday, just slightly up 0.03%. Other markets that we track on the continent is Egypt. Egypt is in the red, 0.11% at 31,800. And then for Nairobi, closed positive 0.16%. And we see they've added on that 125 level. They've been carrying on for a bit. They're now at 126. And talk about the Nairobi Stock Exchange, we do have joining us to discuss what's going on in the market. They're the head of research at KCB Group, Jesse Ludenyo. Mr. Ludenyo, good afternoon and welcome to the program.
Good afternoon, Edie. Eni, how are you?
Great. So what's going on? I think a couple of days ago, there was a big news that came from that's what's happening in the market, some pullouts. What's really going on with the market there in Kenya?
Thank you, Eni. It's quite a cornucopia of factors happening down here. We have seen a rather sluggish Q1 in the Nairobi all-share index. Remember, we came off from a year, or 2024 year, where there was a massive improvement of about 34%. But as of Q1, we're seeing a sluggish gain of about 5%. So that has been because of several factors. One has been the fact that banks have really boosted up the performance in Q1 based on their earnings results. And also, this has also been coupled by a rally in the insurance sector, particular stocks in the insurance space. So that has cushioned the market. But on an overall basis, there has been net outflows from foreign investors, and so that means that on overall performance, the index has largely slugged. And also the market performance has been rather flat because of that foreign outflow. So a lot of this market is not currently being driven by a lot of local investment.
So what do you think is stopping the locals from participating more in the market? Because in Nigeria, yes, of course, we do have that change in proportion. Sometimes it's the foreign investors, but now I believe we have more of the domestic investors in the market. What are some of those discouraging factors for domestic investors in Kenya?
Well, in Kenya and generally in East Africa, we always look at it as a market that has to a large extent, very impatient capital. So the capital here is really driven by returns, immediate returns, which may not necessarily be available in the market all through. Number two is that the market here is also characterized by low information penetration towards the local investment. And the third factor has been that because the government has been very active in the fixed income space, that has led to a rise in rates in the fixed income space, and therefore investors have always preferred to allocate towards the fixed income space vis-a-vis the equities market. Now, what is happening in Q1 has been that as rates have been declining and the central bank has been keen on cutting rates on the fixed income space, there has been reallocation of that capital towards the equities market by the local investors. And so that is what has at least cushioned the markets. But by and large, it has largely been held by the foreign investor participation.
All right, so if you would say something about getting more investors there, you talked about dissemination of information, and I mean, investors are not so patient and all of that, but I guess it's more about information. How would you suggest, for instance, information is shared more, to get more participants, maybe about how the market runs, some of the benefits, that accrue to investors in the stock market?
Actually, that is what has been our focus, even as participants in the market, because in quarter one, what is most notable about the performance of the indices here is a lot of what we call the blue chip stocks, or the most famous stocks in the bourse, have been riding on that fame among the local investors. But what you can see in quarter one is that some of the what we call penny stocks, or some of the very cheap stocks in the bourse, have actually been the ones that have outperformed the rest of the listed stocks. So when you talk about companies like Crown Paints Kenya, that has risen about 18.5%, Liberty Group in the insurance space that has risen about 13.59%, Kakuzi about 10%. These are stocks that you would largely find relatively cheap compared to, or relatively unpopular compared to, your normal Safaricom, your normal KCB. And these are the ones that have risen the performance. So we're trying to increase that sensitization on alternative investment ideas around the bourse, because it's clear now that even the penny stocks can largely create wealth for investors.
So what are the most lucrative sectors in your stock market?
So currently we're still riding on banks. Banking sector has been the most resilient and active sector of the bourse. We're also seeing a bit of resilience from agriculture. Now, agriculture is a bit cyclical. One, because of the changing weather patterns. Two, because of the evaluation metrics. Most of them have what we call biological assets, which are not very easy to value. So that the agricultural sector would come in second, and then of course the manufacturing sector, where we would have companies like East African breweries that have also been resilient over time. And then of course the most popular has been Safaricom, which has been facing a bit of headwinds based on its diversification strategy and moving forward, and therefore. For the last quarter of the year, it has been rather as stagnant and flat. So investors haven't really generated much returns from it, and that is in the technology sector.
All right, thank you so much for your time, Jesse Ludenyo. We do wish to see, bigger numbers. We see you at the 125, 126 level. Well, your counterparts on the continent are doing in thousands, and we hope that we will see the NSE also get into that group really soon. But thank you so much, Head of Research at KCB
Thank
Group.
you, Amy. Thank you.